Stocks rising Wednesday afternoon. The indexes on track to close at record highs. Let's get an outlook for the economy and for the markets. We're joined by Hans Olsen. He's Chief Investment Officer at Fiduciary Trust, and he joins me today from Florida. Welcome to our program, Hans.
Good to be with you, Fred.
Good to have you with us. Now, we've got the stimulus, we've got the vaccines, the rollout, the election is over. What stage are we in terms of the economic recovery, Hans? Is there a letter shape that you ascribe to it?
Well, I think there is, actually, and I think it's a W shape, probably best describes it. So you're right. We've had the first V of the W form. We were hard in and hard out, right? Robustly out, both in the spring and the summer months. And now we expected that we'd always see another slowing of economic activity once we get into the fall and winter due to a second round of infections, the winter wave, if you will, plus the rollout of an eventual vaccine. And sure enough, we've actually seen a slowing in the acquisition of jobs, sort of recovery in the job market. We've seen a peaking out of the PMI indices, which is all suggests that perhaps the easy recovery has been realized. Now we're pausing. There's a growth pause. The question is how much of a pause we're likely to get. I think it'll be much more attenuated than what we saw the first time around. Nothing terribly to worry about. And that is especially, one can especially feel good about that given that $900 billion stimulus that we just got and the fact that we are rolling out a vaccine.
So I see then we're in the second V of that W shape letter that you described. What does that mean in terms of the outlook for the markets in 2021? We're at about record highs right now. How much more to go before we hit a top, and where do you see it heading?
Well, I think one of the big things that we all learned in 2020 was that the markets and the economy don't necessarily foot with one another as the way that we all normally would think that they do. And so I think the story for 2021 will essentially be more of what we saw thankfully at the end of 2020, wherein it's really going to be about earnings and the earnings recovery for U.S. equities. And it'll really be, do we get the earnings that the market is expecting? Probably not. But if we continue to get the recovery that we're expecting, multiples are likely going to stay the same because of low real interest rates. And essentially, if we get high single-digit returns in 2020, I think we can feel pretty good about that.
Single-digit returns, then, that's what you're saying. How then should we reallocate our portfolios to take advantage of the markets in 2021?
Yeah, so in 2020, the story was essentially cap-weighted indices. The S&P 500, which is really now predominated by the top 1% of the holdings there, accounting for roughly a quarter of the index. The story as we've closed out this year is, will we have this big rotation into other sectors that have lagged away from tech? I think there's a good chance that we'll test that notion, whether about a rotation in 2021. I certainly hope it happens. I'd love to see more market participation, but I'm not sure that it happens early in the year. If anything, it probably happens later in the year, because I still think we have a great deal of momentum going into 2021 from what we're seeing unfolding at the end of this year.
I see. And then to reallocate what you have, what would you put domestics versus, say, international? What's the ratio that you think is best?
Yes, well, I still think in the U.S., keeping a heavy footing here, roughly maybe 60% of your equity exposure in the United States makes a great deal of sense. If you've been overweighted U.S. equities, given its outperformance this year, maybe in 2021, it's a good idea to start thinking about perhaps emerging markets and some of the developed international markets, Europe and the like. My guess is that if we have a continuation of a weak dollar in the new year, these markets will start to catch a bid. One, because they've been so unloved over the last several years. Earnings are recovering nicely in some of those markets, and the valuations are, relatively speaking, and it's all relative these days, as you know, Fred, attractive. So I think there's probably a decent opportunity for investors who are looking for relative bargains to be thinking about those markets. Here at home, if they're, I'm sorry?
Any particular regions, whether it's international developed or emerging markets?
Yeah,
or
well, I
countries?
think I would start with emerging markets first, and I think outside of emerging Asia would be a great place. So think Asia ex China, number one. Number two, in Europe, especially in the developed world, I think that looks interesting, and perhaps even Japan merits a look. Proceed with caution, but definitely enjoys a look, I think, in 2021 as well.
Yeah, it seems like Japanese stocks have come back this year after being in
Done
slumber for
quite
some
well.
time. All right.
Yeah.
Well, thank you for your thoughts and your views, Hans. Appreciate it.
Thank you.
Our thanks to Hans Olsen of Fiduciary Trust. I'm Fred Katayama in New York. This is Reuters.